Good morning. Welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of August 4th, 2025. Let's get started. SEAF signals for this week. Technology comes back and we retain utilities and industrials. As we mentioned last week a little bit with tech, there's a chance that it was taking a little bit of a breather and not necessarily reverting the trend. But tech back on top with a strong 4. And then utilities and industrials kind of hanging in there. And then we're seeing a little bit of resurgence in financials with an overall score of 13, also in the favored. And healthcare drops just completely at the bottom, I think making all-time relative underperformance lows. Going into our heat map. Overall, a down week last week in terms of flows, down 2.36% in all. If you added up the 11 sector spider asset flows, they're all down 2.36%, with 1.3% down on Friday. So big down day on Friday. Overall, like I said, tech showing some strength. Still had some really strong accumulation in the strategic quarter. Also seeing a little bit in the tech a month. 0.34% increase on the trading week according to our algorithm. So not quite that 0.40, but still relatively strong. Healthcare outflow of 0.41 negative. So this is down. Big thing to note, not a lot of asset flows from 4 through 10. Just really kind of hovering around 0. That's why these colors are so light in here. Just not a lot of flows in or out here. Majority of that outflow coming out of the healthcare space. All negative here, but just loosely not super strong in terms of flows, not strong in terms of inflows too. So we did break that. We had 26-day streak of 1%. Not having a move positive or negative 1% with that negative 1.3% on Friday. So what does that mean overall? So we're looking, this is our total sector spider AUM, adding up the 11 sector spiders up here, and then looking at the SPY chart down at the bottom. We did break through that 21-day moving average. We'll see if this is sustained. Currently it's Monday. The market is up about 1 point, or by market I mean the S&P 500 is up 1.16% on the day. So this could bounce in and out like we've seen a little bit here, but we did break through, completing that move on Friday right here for about 16% that we captured here if we adhere to the 21-day moving average. So breaking down through, we'll see if this gets sustained down move similar to that we had going through February through April, but we did break through. With the strong outflows and, consistent economic interesting things happening from Washington, this will be kind of a key metric to see. Can we rebound here after we got rejected by this upward resistance, or are we starting this new trend down with the assets under management? Heading into our rainbow charts. Technology, like I said, came down, touched neutral. We had that little bit of pullback in terms of the relative outperformance versus SPY, and then we're right back up to favored, continuing this massive uptrend that we've had. Technology still looks relatively strong. So, with earnings coming in pretty good for most of the big tech firms, tech rebounds a little bit after what looks like maybe a little bit of breather at the top of this relative performance move. Utilities. Utilities had a nice little week, sitting up in favored, trying to break through what was more or less a sideways pattern in this relative outperformance versus SPY. So looking strong, very on the short term. A little bit of a sideways pattern going on in the relative performance going back to last year. Slightly downtrend, but seemingly picking up some steam, potentially some support here on that relative outperformance chart. Industrials. Industrials continues its uptrend, sitting in this lower favorite. I would like to see some stronger flows coming in. We're on the weaker side in terms of 10s for the utilities and the industrials, so I would like to see this shoot up here if we can get some extra strength here. But industrials continues this uptrend that it has in relative performance starting in the beginning of this year in January. We're trading a little bit of a box here. But would really like to see this thing push up. But we're all we're trying to do with this SEAF model is, even with the lighter flow environment that we've been seeing, is just trying to continually the SEAF model tries to do is put you in where the money is going. So the money is flowing into industrials and into utilities a bit, not as fast as we would like to see, but it gets you taking the top three, gets you into being available for the opportunity when these things really start to take off. Last but certainly least, healthcare remains in this deep void. So, the reason I bring this up is the SEAF model traded as a model as the top three. The SEAF model as an indicator allows you to see that healthcare still is a place to avoid. Deep avoid here, really stark downtrend in terms of relative underperformance versus SPY, hitting all-time lows. So, this is still a place to avoid. We've been in this kind of downward trend for quite a while here, but we have a real sustained avoid ranking on healthcare. Healthcare continues to a place where you don't want to be. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.